This is Don Kaufman, and you are watching the TheoTrade evening video, December 28th, 2022. We are just seconds after the cash close here on this Wednesday afternoon. S&P's closing down almost 50 handles. We're going to start this evening's video with a look at what has become unrelenting sell-side activity at year end. Of course, here in the SPX, well, we're home. We're actually being driven into the lower edge. Again, we're being driven into the lower edge of this week's expected move. If you're not familiar with expected move, effectively, it's how the option marketplace depicts risk, okay, moving forward. This SPX, okay, being the mother of all products, that central line is kind of the starting place for the week. This is the upper edge of the expected move, the lower edge of the expected move. Again, the expected move is set and kind of handicapped by option pricing. And option pricing this week is roughly says plus or minus about $70. Where are we right now? Ooh, we're just a hair, okay, just a hair north of that expected move. In fact, to put it on an intraday, again, an intraday, this is all the way down to 1 day, 1 minute. See, the SPX actually closed at 37.82. Lower edge of the expected move, 37.74. So we're right up against it and should anticipate we're going to bleed right down to it here, even after the close. Again, you see the S&Ps now are down pretty much a full 50 points. Talk about closing at or near lows. But okay, without looking too detailed at this, we've done what we expected on the week, and that is we moved the full 70 points. Push all of that aside. Few notes to make this week. Number one, forget about equity products for just a moment. When I say equity products, don't worry about Tesla right now. Don't worry about Apple, which got hammered. Okay. Specifically, we're going to start in the S&P. Okay. Why are we looking at the S&Ps? First of all, if you're not looking at the S&Ps over here, this is the product that really drives order flow to the entire marketplace. The S&P futures are the fastest dissemination of order flow in the marketplace because it's used predominantly as a hedging device for, well, every dealer, which are market makers, every proprietary trading firm. They're all using the S&Ps. And the reason right now that you should pay very careful attention to the S&Ps is something that I brought up in this past weekend's video. That has to deal with we're headed right now into the volatility box. And actually, we can zoom in on this for just a moment. For those of you that did tune into the weekend video, okay, we specifically labeled this range right here. And that is basically 3,800 to be very, very specific. It's somewhere around like 3,811. We start to cross into the volatility box right down, okay, to 3,600. For the better part of about 6 weeks, we were actually trapped inside of this range. And during that period of time, we were just pinging literally back and forth, broke upside for a moment, but pinging back and forth before, of course, a CPI and a Fed announcement took us back out. But it's critically important. All we have to do is just drop minimally, okay? And if you just drop minimally in here, all of a sudden, boom, down to 3,600, bam, right back up to 3,800. It's kind of what I entitled, of course, this past weekend's video, you know, the hurt locker. That's why I call it the hurt locker. You just get pinged around. People get chewed up in here. And, well, you could not be more aligned to break into this this volatility channel. Well, right here, right now. Obviously, if I zoom in, you can see there's recently 1, 2, 3 days of trade. We've actually tested right to the upper edge of that volatility box. And again, well, does this necessarily mean that, you know, new lows are coming for markets? Not necessarily, but again, this year is just, it's not ending on a high note. You know, there's no Santa in a you know 1.25% loss in a marketplace on a Wednesday in a holiday week of trade. Speaking of holiday week of trade, you know, you say what you will, but volume actually picked up. We're going to do close to 1.25 million contracts. Obviously, it's just a little bit lighter. Like, it's not much lighter than it was, for example, last week. You know, days we're doing 1.5 million contracts. But these, again, these sessions, they matter. This is still price action. We're still right up against that volatility box. And as I said, that volatility box had a high probability of reoccurring. So for the remainder of the week, which is obviously just Thursday or Friday, it's a shortened holiday week of trade. That's what I would look for. Now, there's another interesting thing going on right now, and it has to deal with some sector rotations. Stuff that has been categorically weak. Well, today, look at this. Tesla actually finished higher by 3%. I'm not too surprised over there, but stuff that's been categorically weak, all right, maybe popped up a little bit. But here's even more interesting. Stuff that's been categorically or incredibly strong as of late is actually a little weak. Look at Caterpillar, down about percent and change. Walmart actually breaking through this 142 level. That one's going to be well worth watching over here. The entire energy complex, okay, took a decent size hit today. Keep your eye on this in days to come, because as I kind of elaborated on the weekend update, it's the financials I'd pay careful attention to, because if the marketplace is going to make a more substantial move down, right now we're just teeter-totter, like we're at 3,800. And 3,800, it's important because, if you will, that's the opening the door to the volatility box. And if you're just a hair lower than 3,800, then slam right into the 3,600. But in order to get that, good sell side activity to the downside, you're going to have play inside of the financials. And the financials, quite frankly, the S&P is down, 1.25%. The financials held up today, and that one is a surprise to me. It's not too often you look at the tape, you're like, that doesn't make a lot of sense. This one doesn't, because this has been categorically, I wouldn't say strong, okay, but it's been completely flat, if you will, the last 2 weeks of trade. Look for selling again. Look for selling to hit the financials. If we go lower, we have to do it, okay, in an area that hasn't necessarily been hit. Like what could you possibly do to Tesla that hasn't already been done? Apple, okay, Apple absolutely did break. By the way, here's another underlying that we talked about extensively, that if Apple broke through 130, it's going to cause broader weakness to the marketplace. Okay, well, Apple broke 130, and there's your weakness to the marketplace. But again, for follow-through sell-side activity, okay, to be persistent to the downside right now, got to watch those financials, which does mean also bonds may have to come back to life in this one. Bonds seeing some sell-side activity, at least at present time. Nothing too dramatic over here, but I would say that I'm rather surprised that bonds are seeing some sell-side activity. If you take a look at the TNX, again, there's a few things on the screen that almost, if you will, don't add up, which it's not just perplexing. It's, hey, listen, I'll take any sell-side activity I can get, right? Because I trade volatility, but I'm a little perplexed by, again, you have the TNX, the 10-year, taking back off to the upside. The reason I'm perplexed by that is some of the economic news coming out right now is weak. Weaker, okay, economic environment. I would have anticipated these rates to maybe roll over. And if the rates do start to roll over, that is TNX go down, that unto itself would be enough to actually tip over the financials in here. Listen, that's the product obviously to watch in days to come if we're going to have continued selling. All right, so here we are. Two trading days, people. 2 trading days left in the years. This marketplace have anything spectacular left in the tank? Once again, the SPX, hey, listen, we're pretty much already at the lower edge of the expected move. So we did what we anticipated this week, okay? When I asked the question of if there's anything kind of left in the tank, all you have to do to get that answer is to open up the, this is an end of the quarter option. We still have $51, okay, of price action between now, okay, and Friday. Again, this is not a minor move that's being priced in. And I wanted to end with this because, simply put, that kind of volatility in what maybe felt like it was going to be a docile week, okay, to me looks a little unprecedented. Again, in a year with unrelenting selling, okay, and unrelenting sell-side activity into year end, just be on your game right now. A $51 anticipation of movement is still quite significant. All I'm waiting for at this point, look, I want us to tag the lower edge of the expected move. Maybe we'll do it in the morning. It's a pretty good opportunity maybe to sell some premium like VIX. I wouldn't expect VIX to fly up, okay? Not unless we do something spectacular, maybe even below 3,600. Nevertheless, okay, opportunities are abound at this point in time. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.